Property Investor FAQ. What is Division 43? What is Division 43 or Capital Works Deductions? Division 43, Div 43, is the ATO legislation that allows for capital works deductions for the depreciation of building assets, including the construction and installation of facilities and fixtures that are a part of that asset. Cost items that are eligible for capital works deductions include building, tiles, gyprock, timber, etc. Building extensions such as garages, entertainment decks, showrooms, offices, alterations such as adding an internal wall, kitchen renovations or bathroom upgrades. Structural improvements such as carport, sealed driveway, retaining walls and fencing. Preliminary expenses such as architect fees, engineering fees, surveying fees, foundation excavation expenses and costs of building permits also form part of the construction expenditure. Who can claim capital works deductions? Under Division 43, owners of capital works, a building that is income producing within a financial year, are entitled to claim deductions under Division 43 for the time that the building was used to produce an income, rented or awaiting tenants. Owners include individual investors, self-managed superannuation funds, SMSF, property funds, trusts, companies. How to claim for capital works? Under Deductions Division 43. Typically you can claim a capital works deduction for the cost of construction for 40 years from the date the construction was completed. Typically, to claim deductions for capital works you will need some or all of the following. Details of the type of construction. The date the construction commenced. The date the construction was completed. The construction cost, not the purchase price or valuation. Details of who carried out the construction work. Details for the period during the year that the property was used for income-producing purposes. If it is not possible to determine the actual construction costs, you can obtain an estimate from a quantity surveyor or other independent qualified person. The ATO does not consider accountants, real estate agents or valuers as appropriately qualified to estimate construction costs. A quantity surveyor will produce a complete depreciation schedule of all eligible capital works and forecast the deductions claimable each year from construction. This schedule can be used to complete your tax return yourself, or provided to your accountant for them to incorporate into your tax return. How are capital works deductions calculated for Division 43? Deductions for construction costs and structural improvements must be based on the actual costs incurred, not a valuation. If it is not possible to determine the exact costs, the ATO states that you must obtain an estimate by a quantity surveyor or other independent qualified consultant. Different annual deductions rates apply, 2.5% or 4%, depending on when construction commenced, the type of capital works and the nature of their use. What are the CGT implications of claiming capital works deductions? Capital works deductions you claim under Division 43 will be taken into account when you sell the property and have to calculate your capital gain or loss. The deductions claimed under Division 43 will be deducted from the cost base of your property when calculating your capital gain or loss. It is important to remember that the value of $1 added to your cash flow today is worth more than $1 potentially saved in the future. Call us to discuss your investment property on 1300 922 220.